The federal government says Nigeria's energy transition blueprint is projected to unlock more than $410 billion in investment by 2060, positioning the country as the Africa Renewable Energy Hub. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kike Lomo Okere. Speaking at the inaugural Energy Renewable Energy Innovation Forum 2025 in Abuja, Vice President Kashim Shettima says Tinubu's administration is leveraging the nation's vast clean energy potential to drive industrial growth, economic inclusion, and sustainable development. According to him, the federal government's long-term vision is to build 277 gigawatt power by 2060, driven by innovation, local manufacturing, and private sector participation. The Vice President disclosed that an estimate of $23 billion will be required in the short term to expand energy access and connect millions of Nigerians still living in energy poverty. He noted that the government is strengthening incentives for local production, simplifying regulatory frameworks, and deepening partnership with state governments and international investors to fast-track the country's transition to clean energy. He further reveals that engagement through NREEF has already mobilized over $400 million in new investments across Nigerian renewable manufacturing value chain, including solar panel production, smart meters, battery storage, and recycling facilities. These projects are expected to create more than 1,500 direct jobs in multiple states. The forum, attended by Minister of Power Adebayo Adelabo and Managing Director of Rural Electrification Agency Abba Aliu, was hailed as a major step towards achieving Nigeria's renewable energy ambition. It also featured the signing of the multi-million dollars Memorandum of Understanding, including the Dutch government, signifying renewed global confidence in Nigeria's green energy sector. It could be recalled that earlier in August, the REA Managing Director Abba Aliu had identified solar energy as the most economically viable solution to powering both rural and urban communities. He also disclosed that the agency is exploring wind, biomass, and other renewable sources in partnership with Nigeria's Wind Energy Council to develop small-scale wind projects across the country. Nigeria consumed a total of 613.62 million liters of premium motor spirits, popularly known as petrol, for transportation, power generation, and other domestic use between October 2024 and October 10, 2025. This is according to fresh data obtained from the Nigerian Midstream and Downstream Petroleum Regulatory Authority. Despite the ramp-up in the operation at the Dangote Petroleum Refinery and other local plants, imported petrol still accounted for a larger share of country's total fuel supply during the period under review. Out of a total of 613.62 million liters of premium motor spirits consumed between October 2024 and October 10, 2025, the NMDPRA data reveals that 236.08 million liters were supplied by domestic refineries, while 377.54 million liters came through imports. The figure indicates that imported petrol still accounted for the bulk of Nigerians' fuel needs within the period. The import supply contributing about 63% of Nigeria's PMS needs, while local refineries led by the 650,000 barrel per day Dangote refinery provided the remaining 37%, marking a significant improvement from the previous year's level. The NMDPRA data further indicates that domestic production rose steadily from 9.62 million liters per day in October 2024 to 18.93 million liters per day by October 2025, showing a near 100% increase within 1 year period. Conversely, import volumes declined sharply from 46.38 million liters per day in October 2025, reflecting a 65% drop. A monthly breakdown of the data reveals a steady decline in petrol importation and a gradual rise in local supply. Import volumes dropped from 46.38 million liters in October 2024 to 36.39 million liters in November and 38.90 million liters in December. By January 2025, import figures had fallen further to 24.15 million liters, and though there were slight fluctuation in subsequent months, minus 26.79 million liters in February, 25.19 million liters in March, and 23.73 million liters in April. Imports rebound temporarily to 37.37 million liters in May. Thereafter, volume declined again with 28.54 million liters imported in June, with 35.0 million liters in July, 26.66 million liters in August, and 19.26 million liters in September, and a year lower of 15.11 million liters as of October 10, 2025. In contrast, domestic refining output shows notable improvement within the same period, rising from 9.62 million liters in October 2024 to 19.36 million liters in November and 13.13 million liters in December. The upward trend continues in 2025, with local supply climbing to 26.66 million liters in January and 22.42 million liters in February, and maintaining over 20 million liters in both March and 20.65 million liters and in April, 20.35 million liters, though there were minor dip to 17.85 million liters in May, 17.82 million liters in June, and 16.50 million liters in July. Output surged again to 21.19 million liters in August before stabilizing at 18.93 million liters in October 2025. The figures reflect a gradual but significant shift in Nigerian fuel supply structure, with local refinery, particularly the Dangote Petroleum Refinery, steadily closing the gap on imports within 1 year of operation. The document further shows that the total petrol supply averaged 46.6 million liters per day, comprising 29.5 million liters from imports and about 17.1 million liters from local production. The reduction in petrol import has also eased pressure on Nigerian foreign reserve, as the country spends less on importing refined products. Previously, importers required billions of dollars monthly to settle letters of credit and cover freight and insurance costs. However, the report noted fluctuation in overall supply, with volume dip from 55.21 million liters in May 2025 to 34.04 million liters in October 2025, a sign that logistically constrained and periodic maintenance still affects consistent nationwide distribution. Oil and gas analyst says the improvements coincide with the first full year of operation of the Dangote refinery, which began large-scale production in 2025 and now contributes about 15 to 20 million liters of PMS daily to domestic market since its commissioning in May 2023 and subsequent to ramp up through 2024. The Dangote refinery has been under global scrutiny as the flagship of the Nigerian's industry revival agenda. In its first year of sustained operation, the refinery growing output has reshaped Nigeria's fuel supply structure, reduced foreign exchange exposure, and rekindled confidence in local refinery after decades of failed turnaround at the government-owned Port Harcourt, Warri, and Kaduna refineries. Nigerian fintech Moniepoint Incorporation has secured an additional of $19 million in funding to accelerate its expansion across Africa and beyond, bringing its latest Series C round to a total of $200 million. The round was supported by major global investors, including Visa Incorporated, Development Partners International, Leapfrog Investments, and Alphabet Incorporation. Google Africa Investment Fund Moniepoint Senior Vice President Rose Strike disclosed in an interview that global interest in Africa fintech continues to grow. According to him, the fresh fund will be deployed to strengthen Moniepoint's operation in Nigeria, its core market, while supporting new market entries in the United Kingdom and Kenya. The proceeds of the round will be used to power the company's next phase of growth, enhancing its capacity to help Africa's businesses and individuals realize their financial dreams and accelerate Moniepoint's continued expansion across continents and into international markets. The company is now valued at $1 billion, although Strike declined to reveal the exact figure. The new round builds on the $110 million Moniepoint raised in 2024. Founded in 2015 by Tosin Eniolorunda in Lagos, Moniepoint provides payments, banking, and remittance service to millions of users. The company now proceeds over $250 million in annual transactions and aim to operate in at least 5 African countries in the medium to long term. Africa's young and tech-savvy population continues to drive rapid fintech adoption, attracting billions of dollars in investment. Nigerian firms such as Flutterwaves, InterSwitch, and OPay have also achieved unicorn status in recent years, while Uber-backed mobility startup Move is reportedly seeking to raise $300 million at a $2 billion valuation. Commenting on the investment, founder and group CEO of Moniepoint, Tosin Eniolorunda, says Moniepoint was founded out of the genuine passion to widen financial inclusion and to help Africa's entrepreneurs realize their potential. Global Director for Disruptive Technologies, Services and Fund at IFC, Farid Fawzia, says the organization looks forward to supporting Moniepoint's effort to increase the adoption of digital payments among SMEs retailers in Nigeria, a segment underserved by banks and other traditional financial institutions. It could be recalled that in October 2024, Moniepoint announced it had secured $110 million in a Series C from multiple investors, including Google, bringing its valuation to $1 billion and giving it a unicorn status. The Series C investment was led by Development Partners International, Africa Development Partners, a premier fund focused on Africa. Other new investors in the round, which has been closed, include Google Africa Investment Fund and Virod Capital, a leading African private equity firm. Global Impact, Lightrock, and existing investors also participated in the funding round. Price of cooking gas has dropped across the country, with retailers confirming that the cost has fallen from about 2,000 naira per kilogram 3 weeks ago to 1,300 naira and 1,500 naira over the weekend. According to the Liquefied Petroleum Gas Retailer Association of Nigeria, the reduction follows an improvement in supply after scarcity. Chairman of the association, Ayobami Olarinoyi, says the market is yet to stabilize. There has been a significant improvement Consumers also confirmed the price drop in several neighborhoods, though many are still hoping for return of 900 naira per kilogram or below. The recent surge in gas price, which saw rates rise from 1,000 naira per kilogram to high as 2,000 naira per kilogram, was linked to a strike by the Petroleum and Natural Gas Senior Staff Association of Nigeria, PENGASIN, during its disputes with Dangote Refinery. Although the strike has since been suspended, gas price remained high until last week. The Minister of State for Petroleum Resources, Ekperikpe Ekpo, intervened recently, warning marketers against hoarding or exploiting consumers. Retailers had earlier raised concern about the price disparity between Dangote Refinery selling price and the rates offered by the major off-takers. Olanre disclosed that the refinery sold LPG at 15.8 million naira per 20,000 metric ton, while off-takers resold the volume at 18.4 million to 18.5 million naira. Sources at Dangote Refinery also explained that marketers purchased the product at 715,000 naira per metric ton, equivalent to 715 naira per kilogram, insisting the refinery does not regulate retail price. Meanwhile, the Nigerian Association of Liquefied Petroleum Gas Marketers had earlier blamed the retailers for the price hike, a claim the LPG retailers described as unfair and misguided. All right, let's take a quick short break now. We'll be right back. Don't go away. Stay with us. If it just its business points where we extract the Nigerian economy and the government policies. The Director General of Debt Management Office, Patience Oniha, says the federal government proposed $2.35 billion external borrowing plan is a strategic mix of new financing for the 2025 budget, a proactive measures to refinancing maturing Eurobond. The breakdown of the request, which was sent by President Bola Ahmed Tinubu to National Assembly, include $1.229 billion, that is 1.843 trillion naira at 1,500 naira per dollar. A new external loan to part financing the 2025 Appropriation Act and the $1.118 billion to redeem Eurobond issued in 2018, which are due in November 2025. She explained that refinancing maturing Eurobond through fresh borrowing is standard practice in international debt markets and helps Nigeria avoid default while maintaining investors' confidence. President Tinubu has said the fund will be assessed through any of the several instruments in the international markets: Eurobond, syndicates loan, bridging financing, or direct borrowing from multilateral lenders. In recent years, the federal government has relied more heavily on domestic markets to fund budget deficits, raising concern over crowding out private sector investment and higher local borrowing costs. Oniha attributed this trend to global market conditions following the COVID-19 pandemic, while acknowledging the need to manage domestic debt pressures. She dismissed the notion that Nigeria was turning away from concessional financing. The already stabilizing naira is projected to strengthen further, while Nigerian external reserves are expected to receive a significant boost following the government planned issuance of $2.3 billion Eurobond towards the end of the year. Year to date, the naira has appreciated by 4.5%, rising to 1,475 naira per dollar as of Friday, 17th of October 2025, compared to 1,541 naira quoted at the beginning of the year at the Nigerian foreign exchange market. According to the data from the Central Bank of Nigeria, similarly, Nigeria external reserves have grown by $1.80 billion within the same period, representing a 4.4% increase to $42.68 billion on October 16, 2025, from $40.88 billion recorded at the same start of the year. Before we call it a wrap, let's take a quick look at the stock market. The Nigerian exchange opened the week on a positive note as investors recorded a gain of 611 billion naira, driven largely by price appreciation in industrial stock, particularly BUA Cement, and renewed investors' interest in select mid-cap equities. At the close of Monday trading, the market capitalization rose to 95.2 trillion naira from 94.6 trillion naira recorded in the previous session, representing a 0.65% increase. Similarly, the all-share index appreciated by 963.17 points to close at 149,940.81 points, marking a 1 week of 1.51%, a 4-week gain of 5.71%, and a robust year-to-date growth of 45.68%. Market data shows that a total of 415.04 million shares worth 26.96 billion were traded in 31,486 deals, representing a 14% decline in volume but a 62% improvement in turnover when compared to previous trading session. A total of 130 equities participated in the trading, ending with 33 gainers and 33 losers. All right, this is where we'll call it a wrap on Business Point today. Join me again tomorrow on Global Television, channel 365 on DSTV and 276 on Star Times. To stay connected, kindly follow us on all our social media platforms using at Global TV NG. Till I come your way again, I am Kike Lomo Okeri. I celebrate you all.